Good afternoon, everyone, and welcome to the webinar of Sustainability Reporting Standard Board. On behalf of Sustainability Reporting Standard Board, I extend a warm welcome to all of you to the 26th session of our webinar series, Demystifying Sustainability, Catalyzing Growth. Today's session is centered around a critical theme, from numbers to narratives, navigating BRSR 2.0 and IR for sustainable growth. It's my privilege to introduce our eminent speaker for today's session, C.A. Kuldeep Kothari. C.A. Kuldeep Kothari, a fellow chartered accountant, company secretary, and law graduate, is an all India rank holder with over 13 years of professional experience. He co-founded Admin Advisory Private Limited and advises listed companies on financial reporting, INDES, SEBI LODR compliances, ESG and integrated reporting. A certified social and financial auditor, DISA qualified professional, and panel peer technical reviewer with ICI. He has significantly contributed to ICI research publication and peer review initiative. An accomplished author and speaker, he is widely recognized for his expertise in financial reporting, sustainability, and corporate governance. With this, I welcome you, Kuldeep sir, and hand over the session to you.
Thank you, Tanushri, for such a warm introduction. Before starting with the session, I would like to place my thanks to, in absentia, the chairperson of the committee, Preeti ma'am, and the vice chairman of the committee, Sanjeev sir, for giving me this opportunity to interact with all of you. Special thanks towards the secretarial team of the committee who have made this whole arrangement flawless and without any issues at all. So I think today's session is very critical in terms of what we call is the new future of corporate reporting. Whenever I take these sessions or I interact with any of the entities for which we work with or elsewise also, I always say that sustainability, ESG is something which is going to stay in future. If you see the annual report of any of the listed entity, you will see that 60 or 70% portion of the annual report is being covered with non-financial information. And BRSR, as well as integrated reporting, being one of the most important part of the non-financial reporting. And that makes today's topic very interesting as well as, I would say, need of the hour also. You must have, who have attended the SRSB webinars earlier, you must have had the experience of going through various sessions on BRSR. But I would like to convey that I would like to keep today's session primarily around practical concerns and issues which we have faced as a report preparer as well as somebody who is advising listed entities in and around their BRSR reports, sustainability reports, and integrated reports. Because the grass is greener on the other side. And if you reverse it in terms of reporting per se, so it is difficult than it looks, and vice versa, it is easier than it looks. If you want to break down what BRSR is all about, you take an example that you are driving a swanky car on a hilly road, and that too without a fuel gauge. What will happen? Eventually, you are going to land up nowhere because you don't know how much distance you want to travel and how much fuel is left that can take you to your destination or not. Same applies to BRSR. BRSR is a fuel gauge of your sustainability initiatives which your entity is doing. And when we talk about sustainability, we talk about people, profit, planet, all three thriving together to make sure that you are deriving long-term sustainable growth for your entity, as well as we are protecting environment and we are not causing any additional harm which we knowingly or unknowingly have caused to the environment till date. Since it covers all three aspects of ESG, environment, social, and governance, so it extends to a little bit more than environment, and it should not be understood, which I generally we have seen while working with some of these entities, that people do confuse that BRSR is all about environmental related initiatives, or it is all about E part of the ESG. It is about ESG all three parameters, as well as it extends beyond these three parameters, and it extends. It is truly reflection of what we call double mortality. So, without taking much time, give me 30 seconds. I am opening the presentation. I hope that it is visible on the screen. Is it visible on the screen?
Yes, it is visible.
Okay, thank you. So, BRSR is more than what we call a sustainability reporting initiative. It extends to your business domain also. Primarily, what I would call it is that it can be, if you report it in a true spirit, it can be a true reflection of what your business, how your business is impacting the ESG parameters, and vice versa, how these parameters are impacting your business as well as your bottom line and top line. So, where lies the challenge? We are going to discuss, and what additional we can do other than complying with the format which has been prescribed by the regulator SEBI. Because, see, if something is being prescribed by the regulator or it is mandatory, uh, if you talk about compliance, I would not call it, or I would not give any sort of extra marks to any of the entity if they are complying with the specified regulation, because it is, we are duty bound to do that. Whatever we do beyond what is required as a compliance is truly called excellence, and that's what we are going to discuss in today's session, that how truly we can incorporate an integrated manner we can do these reporting initiative, so that truly reflects what our intention is from company's perspective, what we are trying to create as a entity for the stakeholder as well as the world as a whole, and how it is going to serve the purpose. So I'll not take much time on these slides, but quickly I will do a recap sort of thing for those who have new. There might be a case that somebody who has joined this session has not taken any BRSR sessions earlier. So it all started with MCA introducing the National Voluntary Guidelines for Responsible Business Conduct in 2011. And it has been a long journey over 2 decades, which we, as a company, as a stakeholder, as a professional, we all have traveled. And from 2011 to 2025, where we are sitting as of now, we have traveled a long distance. It got converted into BRR, which we used to work before 2021. Then came the one of the major milestone of this whole journey of evolution of sustainability reporting in India. SEBI coming up with a circular on 2017, 6th of February 2017. They issued a circular regarding voluntary adoption of integrated reporting. And those who are not aware what integrated reporting is, in brief, I will tell. In detail, we'll discuss in the later part of the session. Integrated reporting is an international reporting framework which is governed by IFRS Foundation as of now. Erstwhile, it was governed by IIRC, International Integrated Reporting Council. Now the same letter got merged with IFRS Foundation. Now it is being governed by IFRS Foundation, and henceforth it is relatively easy for all of us to understand an integrated financial as well as non-financial standards altogether. Because after issuance of IFRS S1 and S2 and other initiatives which the international reporting body is taking in the routine course, now it is relatively easier, as well as it will be more, I would say, harmonized convergence towards sustainability reporting from financial to non-financial reporting. So in 2017, SEBI issued that specific guidance, and they said that those who are doing BRR may adopt integrated reporting, and there is a clear guidance regarding interoperability of these reporting framework also. But maybe if you read that circular, it is available online. You may download it after the session, or if you would want us to share, I will request the committee to share the relevant circular to all of you. So what has happened when this circular was issued? BRR was in place, and BRR is completely different from the present form of BRSR. As well, it was different from BRSR what was introduced in 2021 also. So it talked about what would have been the case if the entity starts reporting an integrated or preparing an integrated report. Then came the next milestone, that is extension of the BRR to top 1000 listed entities. Then came the next milestone, that is BRSR version first, when it was extended to top 1000 listed entities and BRSR was introduced. And BRSR 2.0, or I would say uh, maybe the beginning of 2.0 started in 2023. And you would appreciate the fact that from 2023, when SEBI came up with the second amendment regulation, it has been a roller coaster ride for all of us as professionals. If we are professionals who are dealing in compliance related work of SEBI LODR or sustainability professional, there has been a case that almost every fortnight or every month there is something new which is coming up, and you are there to interpret the same. You are there to help your clients or as well as the industry that how to take these regulations in the most appropriate manner. But I would like to suggest one other thing also, that gone the days when it has to be the case that it is a one-way communication from the top regulator. Now I would say that interpret these regulations or these circulars, other things, as you interpret an income tax notification, that is, or income tax act, that is, take an harmonious interpretation rather than a literal interpretation. Let me give you some examples. For example, when in 2023 BRSR core was introduced and the format was revamped, there was a lot of confusion, which is still there, I would say, in some parts regarding what is to be disclosed in a particular section, in a particular principle. For example, you take the most critical, or I would say most complicated principle of Section C of BRSR, that is Principle 6. So there was a requirement, and there is a requirement of, reporting intensity based calculation or something called calculations adjusted for purchasing power parity. So what we have seen as report preparer as working with these entities, that everybody or maybe some batch of entities were taking a different sort of basis for calculating the PPP. Others were taking a different basis. There was no uniformity, uh, even in case of reporting as well as in case of assurance. I would say sadly it is the state which was and which is being provided by different entities, because I feel that still it is not adequately maybe reviewed. It is adequately governed, but it is not adequately reviewed by the regulator. Then came the next milestone of this journey, BRSR ISF. That is ISF. For those who are not aware, it is called Industry Standard Forum. It is a body which has been constituted after advisory being issued by the regulator. PICIs, SHM, and CI are the members of this Industry Standard Forum, and the responsibility which has been entrusted by SEBI on Industry Standard Forum is to, simplify, is to form guidance notes, is to form reporting standard kind of things for these notification circulars or new changes which the top regulator is coming up with. And in December 2024, there was a guidance note which was issued by ISF, or I would say core reporting standard. The title, as they call it, was issued by the ISF, and it tried to answer maybe many questions which we will discuss and which we'll see it in the latter part of the presentation, which we all had as a sustainability professional or as a corporate reporting team of a listed entity who is interested with preparation of BRSR or sustainability reports. But I would say it answered many questions, but again, some remains unanswered till date, and it has given rise to some other new questions also. Then BRSR 2.0 and BRSR ISF you can take and you can, interpret the same collectively. Why I am saying so? In 2023, there was a requirement which was being, introduced. It was related to an value chain partners ESG disclosures. The other reporting requirement was related to reasonable assurance. It was there when it was implemented in 2023. Now in 2024, when they came up with this guidance note and the other notification and recommendation of expert committee, which has suggested some measures for ease of doing business, they said that let's defer this value chain partner related disclosure to one more year. Let's convert maybe or introduce some new standard related to reasonable assurance oblique limited assessment, as they like to call it. And many other changes were introduced related to, say, voluntary reporting of carbon credits and voluntary reporting related to carbon credits of top 10 value chain partners also. So you see the evolution, it is going this way. When they introduced, or when it was introduced and it was said that you have to report for value chain partners, I would say that I personally seen with many of these entities while working that it has been a nightmare and it has been a very, very difficult exercise for the reporting teams, because the primary challenge in preparing these sustainability reports or non-financial reporting lies with the data collection as well as the integrity of the data, because systems were not in place. So you have to build a new system. It is not that I woke up someday and I decide that I would like to do something and I'll start reporting at a company's level whose turnover is 5 lakh crore or 10 lakh crore or more than that. So they face challenges in terms of integrating or collecting the data for their BRSR, because BRSR is not that easy as it looks from naked eyes. Then obviously the challenges were with collection of data or reporting of data related to value chain partners also. Because when we say disclosure of ESG related parameters, it was not clear anywhere that up to what level I have to go and what additionally I have to require in terms of all parameters of BRSR for my value chain partners. And there might be a case that for me, based on the definition or based on the criteria given by the regulator, somebody else or my supplier is a relevant value chain partner. So vice versa may not be the case. So initially it was there that 75% of the value chain partners by total sales and total purchases, that is downstream and upstream, were required to be collaborated. The data was required to be collected and to be reported. Later on, they said that let's see. Otherwise, if you say a blanket 75% limit, then it will be a problem for the entities, because the number of entities for which they have to report or collect these data will be a handsome figure. So they said that let's keep it at 2% individually for each downstream and upstream value chain partner, that is supplier or buyer. Even if it is so technically, approximately 37 value chain partners are required to be reported, even if it is kept at 2%. And for those 37, for example, I am working for, say, Reliance. For Reliance, maybe the Gulf Oil or the Aramco Group is a relevant value chain partner. And for me, for reporting purpose, I will seek data points from my value chain partner. But vice versa, it may not be the case, and it might be a case that the value chain partner is saying that why would I supply my data points or data sets to you for your reporting purpose? I would not like to disclose the same. So a lot of, I would say, training awareness is required. Still, it is going on, and it is in the teethering phase. I would say still it is in the teethering phase. Even if we have completed approximately 4 complete years of BRSR reporting, because a lot of changes have been done. You take voluntary disclosure of carbon credits. When we say that, like, the value chain reporting for ESG reporting for value chain partners has been disclosed, has been deferred by 1 year to 2526. But there was no such deferment for voluntary reporting related to carbon credits generated or maybe procured by top 10 value chain partners by their contribution to the entity's value chain or business. So it is a very difficult situation to be in with, because the last uh, official communication related to BRSR was made on, I think, 28th of March 2025, when the regulator approved the recommendation of the expert committee on ease of doing business related to BRSR. Then ESG rating, etc. Because ESG rating is also a new concept which has come since last year only, and we I think we had a event last year also, webinar on ESG rating with one of the topmost rating provider of the country, Crisil. So when you talk about ESG rating and when you talk about credit ratings, it is the back working of the mechanism is relatively similar. If you want a credit rating for any of your instrument or for your entity, then there is a detailed, I would say, assessment which is being carried out by the rating provider. Same is the case for ESG rating also. And why it is more important, because when you go or when you move towards sustainable finance, raising, issuing sustainability bonds, KPI linked, new issues which are coming up, it is very important that there is somebody and there is an independent assessment of these known financial parameters which are being given in sustainability reports, in BRSR reports also.
Tanush,
I think somebody,
Tanushri, can you
Tanushri,
please
you
go
have
on
to
mute?
put yourself on mute. So there is a lot which is required to be done in terms of uh, preparation or assessing your preparedness for getting an ESG rating, because it will be a true reflection of your sustainability initiatives. Till now, with due respect, I'm saying that top 250 entities, as mandated by SEBI, might have got an additional or an external assurance, reasonable assurance or limited assessment from an independent person, or somebody else might have got it done voluntary also. But still, there is a lot which is required to be done on assurance part also, because see, it is not. I am again repeating, it is not being adequately monitored. And had it been the case, as the regulator vouches for our audit reports, statutory audit reports, if it starts vouching for the sustainability assurance reports which are given, the situation will be difficult in practical senses. So, getting ESG rating is not that easy, but it will be an additional uh, criteria for stakeholders, investors to assess whether seeing the sustainability initiatives of the entity, whether we want to get into that entity, we want to invest, or we want to track that entity for initial assessment purpose. There are a lot of parameters which are being disclosed in BRSR, other non-financial information which is also provided by various entities. If they are preparing an integrated report, then there will be a separate integrated reporting section, value chain, value creation model, reporting boundary, etc. All six capitals. There will be disclosure of data in that section also, and there is disclosure of data in BRSR also. If any one of you have worked as a report preparer or as a professional who is working with listed entities, corporate reporting teams, you will appreciate this fact that there is difference and clearly visible difference. I would not like to take any specific names between what we are reporting in BRSR and what we are reporting elsewhere in sustainability reports, in the so-called ESG reports, in integrated reports. And the simple reason which I see, I might be wrong and I would like to be wrong, is that since BRSR is a SEBI mandated framework and it is likely that it will be under scrutiny by the regulator, let's push the data which is accurately with us, maybe, which is less likely to be inaccurate, and let's push the data which suits our image in other sections of sustainability reports or integrated reports. One such simple example is that in BRSR, when you disclose CSR related initiatives, you are required to disclose that how many number of people you have impacted, what lives you have impacted. So in one top listed entities case, what we have seen is that the number which was reported in BRSR was somewhere in lakhs, maybe say X amount of people's life that they impacted through the CSR initiatives. And when we went to, or when we saw that integrated reporting section in which they have also disclosed the same in social relationship capital, the number was in millions. So when we asked the particular person who was responsible. The answer was that the data which is reported in BRSR is on yearly basis. That is, for example, if I'm reporting for 2425, the data is for 2425, and the data which is reported in integrated report is on cumulative basis. So you see that the slightest difference is there between being negligent and between doing something with intention. So in modern terms they call it greenwashing. So greenwashing can be intentional when I intentionally report something which is not correct or dilute the reporting disclosures to the extent that the thing which is important gets unnoticed and it passes through the attention of the stakeholder. Or there might be a case which I've told you, it is unintentional greenwashing. So we have to be very careful when we report these things. One very, very important aspect which we are required to take care of, that there is some set of financial data which is also required to be reported in BRSR in terms of spend on well-being of employees, in terms of wages, in terms of remuneration, in terms of CSR spends, in terms of R&D expenditure, etc., and at many more places. So make sure that you backtrack this data to your financial statement, and there is nothing which is being reported in the BRSR which eventually doesn't reconciles with your published financial statement, or you are unable to substantiate that particular relation between the data which is given in the BRSR and which is there in your financial statement. So it is very important that when we do prepare these reports, everything has to go hand in hand. It is not that I'm having a very big puzzle and I'm putting all the pieces in a zigzag manner here and there. It has to be placed in a coordinated way so that whatever is coming out comes out to be true and correct as we would like to uh, disclose and present. And whatever is coming out conveys the correct message, which is for which these reporting initiatives are started with. So when you talk about BRSR, I think there is not much which we should discuss about what is BRSR, because it is something which is very common. But again, for those who are new to this concept, BRSR is the one of the first formalized sustainability reporting initiatives or frameworks by any of the country. So India, in this sense, is slightly ahead of the West as well as other countries, where I would say that with BRSR we started or we embarked on a very special journey of having a documented, having a proper standardized framework for reporting sustainability data. As I told in beginning, it extends well beyond, in my understanding, all three ESG parameters, that is environmental aspect, social aspects, and governance aspect. It is primarily a reflection or deflection of how these factors are evolving or evolving around your business value creation process, and that is what IR also talks about. Why somebody would say that BRSR is all about ESG or BRSR is about the E part of the ESG concept. But when you see the section A, question number 25, revised format I'm talking about, question number 26. So you will find disclosures related to stakeholders, you will find disclosures related to material issues. Again, in very little time, would like to discuss what material issues are. So when you talk about material issues are those IROs. IROs are impact, risk, and opportunities which are relevant to your entity's value creation process. It may be a case that a IRO or a material issue is something which is part of impact materiality. That is how your entity's value creation process or business process is impacting the ESG parameters, that is environmental, social, and governance aspect. And the vice versa case, financial materiality, that how these parameters are affecting your entity's value creation process. So when you see question number 26 of BRSR, again coming back to question number 26 of BRSR, and why I am juggling between these various concepts which are interconnected and integrated, because it is very important for us to know that how to deal with all these different reporting initiatives or different standards to prepare an comprehensive, integrated, correct and true sustainability report or BRSR report. So in question number 26, it asks you that what is the material issue. Then if you can recall, it asks you that whether it is a risk and opportunity. Then it requires you to disclose whether it is having a positive or negative impact on your financials. So here lies the hidden concept of double materiality, which our regulator has foreseen in 2021 itself. So if you want to assess whether a material issue has, first you bifurcate into a risk and opportunities, and it has any impact on your financial statement, positive or negative financials, positive or negative, you have to do a double materiality to be able to say that whatever you have disclosed is correct. It is directly relatable to your entity. So here comes the role of double materiality also. Double materiality, they are not much frameworks which are available. CSRD, that is the Corporate Social Responsibility Directive, and ESRS, these are the directives and standards of EU, which are the first standards or directives to be in place for an formal double materiality assessment process. But there is no other double materiality assessment standard. Some of them might call or might claim that they are their standard or their reporting initiatives is having such system or process in place or framework in place which promotes or which helps or which guides the entities to do double materiality assessment, but it is not the case. So BRSR in itself, it is a very comprehensive framework. It is one of the most, uh, I would say, advanced and standardized sustainability reporting framework, as I already told. It is blend of, I would say, TCFD, ESRS, or GRI, or IR per se for this cause. It is applicable to top 1,000 listed entities by market capitalization. And the disclosure related parameters flows in different sort of disclosures which are required to be given. Some are in question and answer form, some are in yes or no form, some are in options form, some are descriptive. So there are different type of disclosures which are required to be given. One important I would say add on to BRSR applicability, which I would like to highlight here, is that last year only the regulator has come up within specific change in which it said that earlier what used to be the case that if somebody says that BRSR is mandatory for top 1,000 listed entities, how to calculate the same? There was no guidance as on the specific method which was required to be followed. Now they said that, see, if as on 31st March 2000, say 25, even if I'm coming to know that my entity's market cap had crossed and it is now falling under the bracket of 12,000 entities by market cap, how would I be able to put systems in place within a span of 10, 15, 20 days or a month so that I can start capturing the data for 2526? It was not possible and practically difficult also. So there was no sunset clause also earlier. So now what SEBI has said? SEBI has said that every year on 31st December, we have to see based on past 6 months, that is July to December, based on 6 months average market cap, they will prepare or the exchanges will issue a list of top 1,000 entities by market cap, and based on which you will be required to comply with these regulations starting from the next 1st April, that is the next financial year. So you are having a clear 3 months to prepare yourself or your entity for implementing these initiatives. Now comes the sunset clause. If for continuously for 3 years your entity is out of this bracket of top 1,000 listed entities by market cap, you can stop uh, reporting whatever initiatives you have started following due to the applicability of top 1,000 listed entities. So I think it is a very welcome step which has been uh, taken by the regulator. But it is these small things are very important when you go to the extent of preparing a BRSR report or assuring a BRSR report at your own, because these assessments will play and will pave the way towards a clean sustainability reporting domain, which we all are emphasizing. Now, if you say from what and how BRSR framework was built, we have sufficiently discussed that we have sufficiently discussed that BRSR is a blend of all these international reporting frameworks, UN sustainability goal. I would not say it is blend of UN SDGs, but it is blend of what the sustainability development goals intends to do. It is somewhere it is based on NGRBC, that is National Guidelines for Responsible Business Conduct, and various other sustainability initiatives and framework which was there. GRI is also one of them, and IR is also one of them. So, all in all, long story cut short, what we have to assess is that when you talk about BRSR, you should talk about an comprehensive, holistic approach which an assurer preparer has to follow. It covers all these parameters. We need not to discuss in detail what is there in GRI, what is in NGRBC, but let's discuss how this mandate has sailed through over these few years post 2021. 2021 top 1000 listed entities were required to make sure that they prepare an BRSR for in place of BRR. Now, as I told, at present, what we are seeing is that the way it is to be decided that which entity will fall under top 1000 and when the sunset clause will apply has already been defined by the regulator. Then, in 2023, the framework got revamped or revised, and then post that in bits and pieces the regulator issued some circulars, issued ISF also. Then in 2025, ease of doing business, 28 March 2025, and carbon credit rating related disclosures, as well as sectorial disclosures also, which the regulator says that in which we all feel as a report preparer assurer also that sector specific disclosures are very, very important. See, you have to compare apple by apple. It is not going to be the case that what is applicable in terms of sustainability for an entity which is manufacturing one, say Tata Steel, to entity which is a service provider, say Infosys. Vice versa, it is not going to be the case that what is applicable to Tata Steel or Tata Power is applicable to HUL also, because the manufacturing processes are different. The use of these resources, all three resources, as well as the impact is completely different. So we have to be, I would say, very vigilant when we are working around these reports. And it is, I think, if it is not there in any of the standards, if something is not mandated by the regulator, even if it is the case, then we should try to report or try to make sure that whatever we are reporting is at least relevant for our sectors. So coming forward, in brief, I would like to discuss, will not take much time. BRSR is divided into three parts: Section A, Section B, and Section C. Which is the most important part? If you want a shortcut, there is no shortcut as such to gain the full knowledge of this comprehensive reporting framework. But still, there are a few questions which I feel personally that they are more important. For example, if you take Section A, it says that it is a section which requires journal details of company to be disclosed. But having said this, there is a question number 13, if I'm not wrong, which requires an entity to disclose that whether the BRSR which they have prepared is done on consolidated or standalone basis. Somebody will say that there is no issue as such in this particular disclosure, but it is again a very interesting as well as challenging thing. So when you see entities writing that it is done on consolidated basis, then to up to what extent the consolidation has been done in terms of data which is being disclosed in BRSR. On the other side, if you say standalone, are you sure that whatever you have disclosed on year basis is pertaining to the entity for which BRSR is being prepared? In recent year, we have faced such challenge with an large leading PSU that they did in bits and pieces, they did BRSR reporting on consolidated basis on 2324. Now, when came the case for 2425, there was a very different issue which has risen up to all those who were working with the particular report. That see, since this year, CAG also came up with verification of the data which was there in BRSR. So now it became difficult for them to go back and substantiate what data has been reported in last year's report and take the same basis in the current year. So they had to switch it off, that is from consolidation related disclosure to standalone, and then switch it on back that for this year they disclosed the BRSR on standalone basis. Other type of anomaly which as a assurer or preparer you should see is that when you write that in consolidated basis I am doing the BRSR, then there is a question in section A which asks about that to what extent your subsidiaries, associates, and joint ventures have contributed or participated in the BRSR reporting. So, if the answer is consolidated in the question, earlier question, then the answer to this question has to be in affirmation as well as 100%. Or if there is not 100% integration or consolidation, then specific caveats are required to be disclosed. And vice versa. If I write in that earlier question that I am doing BRSR reporting on a standalone basis, then in this question, I have seen in many cases, we have seen collectively working with my team and other co-founders that companies are writing name of subsidiaries and in the column in which it is asked that what percentage of contribution or participation is there by the subsidiary associate, there are 70, 80, or 100% being written. And when in other earlier question you are writing that you are doing BRSR reporting on a standalone basis. Same is the case for reporting boundary, which is there in integrated report, because BRSR is not the only report which you are going to prepare or annex with your annual report. Integrated or sustainability report or business sections or MD&A for this course is part of that whole reporting structure. So there has to be integration and uniformity of the data. So if I write that I am preparing, ideally it should be equal. I am giving an disclaimer before I'm making this statement that in case of reporting boundary, if you ask me, ideally it should be symmetrical. That in integrated or other sustainability report, I should do. If I'm doing standalone, then in BRSI standalone, or vice versa, consolidated, then consolidated. But it can be different. There is no foundation from the statutory point of view that the reporting boundary can't be different in these two different sections. But even if in one section or even if apart 3-4 question I'm giving different sort of disclosure in the same report, it makes the situation worrisome. Then you come to section B, which is related to management and process disclosures. It has in totality 12 questions which are required to be answered. Yes, ma'am.
Yeah, Kuldeep, we have a question from the some participants.
Yes, please.
Before we move on to the section B, can we take those?
Yeah, sure.
Yeah. So first question is, how should organization manage inconsistency in sector-specific benchmarks?
See, inconsistency between the sector-specific benchmark is something which has been highlighted by the regulator also. So if you talk about benchmarking your entity's reports, see, you have to dissect benchmarking into 2-3 parts. Even if we do or I do benchmarking, what we do is that first you benchmark with your peers. As the regulator also says that if you found or if you find that the peers are not reporting at par, then you can take the reference of your global peers also. Then comes, for example, see, if I am reporting water or waste intensity related data, there might be a case the numbers will be high. In case of a entity which is into steel manufacturing, say take example of Tata Steel, and in the other case, as I told, the numbers will be different when you go for a FMCG sector company or any other manufacturing entity. So the answer to this question or the solution to this problem, I think, lies in between those who are working with the relevant sectors. What we should do is that, uh, see, I don't know from where this question is coming from or what is the exact problem, but what we have seen is the case that, see, if I am preparing a BRSR report or IR report, what I'll do is that I'll see some top 10 or 15 companies reports, and I'll just control C and control V, and I'll try to incorporate even the calculations also somewhat to my set of data. So for this purpose, I would say SOPs are very important before you start preparing for your current year. Say in current year we are already halfway through 2526, but you have to start this process in very beginning of the year to set SOPs for collection of data, as well as, I would say, maybe there is a mixed response in terms of this particular solution, but there can be a case that you get reasonable or limited assurance as you would like to take for your final report on quarterly basis. These three four things can be done to remove or to eradicate sector related benchmarking inconsistency.
Okay. Thank you, Pradeep.
Any other
And like,
question?
yeah, we have two more questions. How does digital transformation impact the accuracy and transparency of the BRSR disclosures?
Correct. So very important and apt question. I don't know whoever asked this. See, we all are on a digital reform drive in almost all sectors. AI has taken over everywhere. Even in case of financial reporting, in case of report preparation, the use of softwares and as well as AI has risen to a new extent. So, how it is going to help? When you take the traditional method of preparing any report, financial, non-financial, BRSR, sustainability, etc., we used to prepare templates. We used to circulate those templates to respective departments, and then these respective departments, the process owners will then circulate these, templates or question answers to the relevant stakeholders. But now the situation has changed in past few years. What we have seen and what we also work around the same, that there are specific softwares which are there for which gets embedded into your entities. I would say main reporting or data collection software, be it SAP, be it in case of banking industry, Oracle, etc., or if any other ERP if you are using within your entity. So do consider going for a automated software which gets embedded. Make sure that it gets embedded within your entity's original reporting system, framework, ERP, SAP, whatever, etc. It will help you in getting the data in real time and collecting the correct data. For example, if you take any bank's case for discussion, thousands of branches are there. In case of SBI, in case of SDFC, Axis, ICICI Bank, or PNB, the number of branches is more than 5,000, 10,000 also. So practically, it is impossible for me without use of technology or without use of AI or software that I get correct data of what emissions have been, generated by a branch which is located, say, very far from my head office, say from Mumbai to Uttarakhand or from Delhi to somewhere in South. So software or technology will do the job for you. Second is it will save a lot of time. Again, a very small example which you all can relate, that to calculate whatever units we have consumed, whatever in terms of electricity, water, etc., we'll scan or we'll manually, put these water and electricity bills or meter readings into the system, and then the system will generate something. Then we will revalidate and revalidate, and this process will go on and on. So if you have any such technology driven add-on initiative specific software in place which is embedded within your entity's original data collection system software, SAP, ERP, etc., it makes your job easy. It will do the job in fractions of time which, if you do it manually or you do it traditional way, it will take. And it is the data quality will also be much cleaner and much, I would say, I would say much assurable also. So there are many initiatives which are there. But having said this, there is a caveat, ma'am, which I think we all should take care in mind while going for these softwares. So try to make sure that you take any tech tool or any software which serves the purpose, not serves the fancy presentation. So there might be a case that as a seller, if I'm coming to you, I'm going to give a very fancy or over the cloud type of presentation. We'll do this and that, but we have to understand, and you can correlate it with the earlier question, that the sectoral inconsistency as well as the sectoral needs are also different. So make sure that whatever tech tool you are choosing, you choose it which serve the real purpose and it addresses the real challenges within your entity, not a journal purpose statement which is required to be followed.
Um, yeah, thank you, Kuldeep. Uh, uh, I think you have answered this question very well. Now the last, as of now, we have the last question. What
Hmm.
strategies help supply chain and third party vendors interact and comply with regulations so that we can be in a position to comply with BRSR?
Correct. So again, it is very relevant question. I think those who are asking these questions are spot on in asking these questions. See, what's your name, Kinjal?
Yes. As in
So
the participant is I
yes, yes.
don't. Yeah.
Kinjal, what we have seen last year also, when initially this value chain related reporting was made mandatory, there was a lot of hue and cry between almost tops of the top entities across the industry, because it
Hmm.
was practically very difficult for them to collate and collect data. Because when you say collect and report data for value chain partners, uh, I am saying or making this statement in a place where it is difficult for me to even collect data and collect data for my entity itself. So very different sort of challenges which we have faced. I would like to share one of them. One was related to, as I said earlier, that in a case that for a very large listed entities, they tried approaching their foreign counterpart, or maybe entity which was according to the limits set by the regulator, was falling within the limit of this value chain reporting thing. But what happened that they said that for you there might be a case that we are, as I said earlier, we are falling within a criteria and you are required to report. For us there is no mandatory requirement, vice versa. So there is only one way to sail through this practical challenge, is that to educate and make sure that your value chain partners are aware. Again, I would say the role of SOPs and putting systems in place and putting tech and software in place, data in place, is very important. You have to educate and push through this information from the very beginning, and it will not going happen in a year or 2 years. It is a process driven thing which I think going to take 2 to 3 years to settle down still. Because if it is not deferred, 2526 will formally be the first year in which SEBI will say that you have to report for your value chain partners. So you have to draft SOPs and you have to educate and make sure that your value chain partners are aware. One case might be that I say, as a traditional training or awareness process, I push through Excel forms, I push through data templates, I push through flyers, I push through other information. Other thing is that integrate these questions or make sure that some way somewhat you are able to capture this data at the very beginning of doing or creating a vendor in your reporting framework or system, ERP, SAP, etc. For example, I, as an entity administrator, if I approach, say, HUL, so what they will do, there are a lot of, disclosures which are required to be made in very beginning, be it the case that I tick in some disclosure that I am following with, say, employee well-being related criteria which have been set by the company as a benchmark. There might be a case that I'm not doing so, but for data collection purpose, it has to be there has to be a process that the data gets collected, almost maximum data gets collected in the entry point only, that when a new vendor is created. If it is not the case and you are facing this challenge with existing vendors or existing value chain partners, then I think interacting with them through proper training and awareness related mechanism, and making sure that you communicate this message that this is not additional wasteful exercise. If it is a listed entity or it is an entity which the domicile of which is in India itself, then it will be relatively easy for you to educate and tell that if you start collecting this data, it is going to help the entity or the value chain partner in their own sustainability journey. The problem primarily will lie more in the case when the value chain partner is not of Indian domicile and it is from somewhere outside. Then in that case, you have to use systems, you have to use tech, and as well as pushing through the information, making sure that you communicate this message that it is not additional reporting which is to be done. It is something which is going to add value to their own process also. And it is very well, and it is very easy for, if somebody properly explains to the value chain partner, to make them understand that whatever data they will collect, it is going to help their own cause only, not only our cause, that is the entity which is seeking the data. So we can move ahead, Kinjal.
Yeah, we can go ahead.
Okay. So we were at section B. So there are 12 questions which are there to be answered in section B. Out of these 12 questions, these questions, revolve around 9 principles. Uh, these questions evolve around various policy related disclosures which are required to be given. But one of the most important questions, or maybe the column which is there in this section, is related to the section in which the goals are required to be disclosed. For example, there is in question number 2, if I'm not wrong, in question number 2, there is a requirement to disclose your ESG related goals or what initiative your entity has taken. And the follow up question asks you about your progress in terms of whatever goals you have taken. It is a very, I would say, very important tool to communicate your entity's clear, quantifiable, sustainable targets. So, but again, with this information comes a caveat and caution also, that please try avoiding putting up any vague numbers. For example, in few of the reports, what we have seen is that in 2024-25, that is 31st March 2024's report, it was written that they want to be carbon neutral, or they want to reduce the carbon emissions by 50% in 2425, or after 31st March 2025. But when they reviewed their position in 2025, they were nowhere near whatever they have, communicated or disclosed in the relevant question in previous year. So the problem lies in, having vague claims, because then one mistake will lead towards other, or maybe it is not a mistake. Maybe you are saying that you are having an aspirational target, but you have to evaluate while putting up these targets or specific goals related to all three parameters in any of your questions answered in BRSR, as well as elsewhere in also in the sustainability report. Now, uh, how do I do the goal setting? How do I take the targets? So it is not as fancy as it appears to be from the name. There is a concept which is gaining prevalence in top listed entities, on in those entities which want to have a real impact on or have a real assessment of where they are standing in terms of their sustainability journey, is called SBTI. It is science based technology initiatives. It is an organization which helps you, or you have to register your entity to have specific targets set for you based on your business process, based on your current situation, based on wherever you want to travel in next 5, 10, or 15 years. So SBTIs is something which is widely recognized, as well as it is more reliable also. So if your entity size is good enough, if you have sufficient manpower as well as the intention to go a mile ahead in the sustainability journey, then in that case we would suggest, or it is an suggestion for our side, that do consider taking SBTIs also, because even if you don't take SBTIs, please follow the process while you are disclosing or taking any goal or setting any sort of parameters or benchmark for 2 years, 3 years, 5 years, or 10 years down the line. It will help your cause, because when you disclose the performance or evaluate your company's journey in terms of what you have decided earlier, it will be easier for you. Then comes the most important section of BRSR, that is section C. It is it comprises of 9 principles. So it is called principle based or principle wise performance disclosure. Out of which I would say principle 6 is something which is a slightly complicated, which includes slightly complicated calculations. So what used to be the case in earlier, it was like that there were questions in all these sections, and there were indicators, leadership indicators or questions. Now in the revised format, what they have done is they've segregated these questions into 2 parts. One is essential indicator. Essential indicator means that and the question numbers of essential questions will start from E1, and for those which are voluntary or not mandatory ones, it will start from L. So E1, E2, E3, and L1, L2, E3, and hence on so on and so forth. It will flow like this only. So for essential indicators, it is compulsory for you to uh, disclose data related to those indicators. And if it is the case that you are not able to collect, collate, or disclose the data related to the same, then in that case, you are required to give an substantiated reason, which is backed by logic and data, that this is the case why you are not able to disclose particular thing in this essential indicator. Then, if you go to leadership or indicators of voluntary disclosures, these are basically questions which are not mandatory ones. And even if you skip, or if you say that you're not going to disclose or whatever reasons, you can skip the same. But again, I would say, see, sooner or later, those indicators which are voluntary or leadership, they might come in leader essential indicator section sooner or later. So it is advisable that you start preparing for these questions from the very beginning itself, because it will take your entity also to set systems and set certain processes in place so the data is collected and reported in the correct manner. So then, as I discussed earlier, there are 5 type of disclosures which are there in BRSR. One is free flowing text, in which you can, in which you can write in descriptive manner, for example, related to safety and well-being, etc. There are other type of questions which are tabular questions, in which you are required to give a certain set of data points. For example, how many number of employees are there, percentage of employees covered with certain set of training, if any fine, penalties, etc. is given. Then comes the stakeholder engagement sections of frequency, etc. Then the third type of uh, maybe part of this BRSR report is complex calculations, which primarily pertains to waste, water, and energy, GHG emissions, etc. Emissions 1, 2, and 3, scope 1, 2, and 3, out of which scope 3 is not mandatory one, it is part of the leadership indicators. But again, I would say it is very important for us to, collect this data also. And it slightly becomes more complicated for the service industry. Why complicated for the service industry? Because if you say scope 1 is scope 2, there are less chances that these service industries or companies are going to have scope 1 and scope 2 emissions. But the maximum number of emission which will be there in these service industries will be pertaining to scope 3 emission, that is indirect emissions. For example, if I'm an employee, if I'm traveling from work to my home or home to work, or I'm traveling for work from one city to other city, or if I'm taking a flight also, even if it is considered as an indirect emission, it is adding on to the count of my total GHG emissions generated. So indirect emissions, as in scope 3, is very important and relevant for service sector industries, and rest 1 and 2, one most important for manufacturing industry, 1 and 2, one is more important and 3 is more important for service sector industry. Then there are some disclosures which are related to policy related principles, for example openness in business, for example how you engage with your stakeholder, etc. So there are 5 type of disclosures which are there in a BRSR report. And when you prepare a BRSR report, don't, again I'm cautioning you, or I'm trying to highlight that don't go by a mindset that it is just an form which is required to be filled. Kahin yes karenge, kahin no karenge, tabular aayega, whatever we want to write, we will write. But try to take out the actual intent of uh, a particular question and try to embed those initiatives into within your entity's initiative. For example, in response to a question, you are required to give certain data points or data related to trainings which have been carried out by your company, and how many percentage of employees or workers are covered by certain sort of trainings, other initiatives. So I would say that let's take this particular, for example, initiative as an value adding measure within your entity and try to impart these trainings on ground, and trainings which are effective and efficient also, rather than making them as a reporting tool for BRSR or sustainability or somewhere else. Section A, we have discussed already in detail that it is related to general information of an company. The most important questions are 2 or 3 questions in section A. One question is related to reporting boundary. The other question is related to stakeholders. And the third question is related to material issues. So while disclosing these 3 specific data points in these questions, make sure that whatever you are doing is correct and is backed by proper, I would say, working, because material issues will be there in your MDNA, will be there in your integrated report also. Ideally, again, I'm saying that it is not a statutory mandate that it has to be same in BRSR, IR, integrated report, or somewhere else. But ideally, it should be same because it will reflect how truly and in detail your entity has integrated these reporting initiatives into your business value creation process. And then comes section C, which talks about 9 principles on principle-wise performance is required to be reported. It includes your sustainability and safe good services, employee well-being, uh, openness of business, your water waste and energy-related data, inclusive growth, development, etc. Responsible consumer engagement also, even for that case. So one such example is that in one response to one question, you are required to answer in section C, in openness of business, or inclusive growth and equitable opportunity and development, that how many number of jobs have been created in smaller cities or for marginalized groups or vulnerable groups. So again, it is a very important tool for an entity which is into the same kind of business to showcase and depict that how employment generation made by their entities helping the cause to uplift the life of each and every section of the community. But on the other side, there might be a case, as we discussed earlier, that uh, the response to this question, or the data point in the response to this question, may not be, may not look that good for a entity which is primarily say related to a manufacturing facility, and the manufacturing facility is situated in a space which is far from any of these small cities or where the marginalized group doesn't live. So what will happen in that case? That somebody comparing XYZ manufacturing entities, BRSR 2, XYZ banks, BRSR, they will see different sort of number being reported in uh, these two different BRSR reports. And but if you are aware enough, and if you take the sectoral benchmark, or if you take the sectoral assessment of these reports, then only you will be able to figure out that in practicality the entity which you are assessing is standing on which level, which front, or on what basis you are assessing the entity. So we have covered this in 2023 very quickly. I would like to do a recap kind of thing, that as I said, that there are 62 voluntary, 62 is essential indicator and 42 leadership indicators. There might be a case that sooner or later, whatever is lying in the leadership indicator section will move to essential indicator section. And the same happened in 2023, wherein Principle 6, for example, details related to water discharge for the reporting period as well as the previous period was not mandatory, but they made it mandatory from last year. For example, in Principle 9, the details related to the data breaches or security incidents which has happened during the reporting period was not mandatory earlier. They made the same mandatory in 2023 when they revamped the BRSR. For example, the disclosure related to purchasing power parity or intensity related ratios or output based calculation was not mandatory earlier. Now they have made it mandatory in the revised format, which is applicable since 2023. So there is a case in which you will see that these indicators flowing from leadership to essential, or maybe in exceptional cases from essential to leadership indicator also. But it is very important and relevant for the entity to prepare yourself, so that you make sure that for you all 104 indicators are essential indicators, and you prepare your entity in that direction only. In addition to this, various other questions and sections were introduced which talked about excellence, or which talked about going a slight level beyond the ESG parameters, as we discussed earlier, and we said that BRSR is very comprehensive reporting framework, in which, like, the disclosure related to number of days for accounts payable, the disclosure related to measures towards well-being of employees, uh, even if it is permanent or other than permanent, also in a specified format, it is made mandatory. Again, there will be a confusion as to what is to be included in the well-being spend, which is being done by your entity, and you will see a variety of percentage figures in various sort of BRSR reports. Somewhere you will find that the percentage is 2%, somewhere you find the percentage is 10, 12, or 15% also. For that case, you have to assess based on the industry BRSR you are reviewing or you are working around, that whether the data makes sense, and you are required to deep dig in to assess whether the data is correct or not. So it is very important that I need to see the underlying entity for which I am reviewing the same. But in the ISR, which is being issued by the Industry Standard Forum in December 2024, they clarified on this topic also. They said that what is to be included in the cost, which will be taken as a basis numerator for calculating the percentage of spend which is being done for employees and workers. Then I think the gross wages paid to females as to percentage to total wages paid by the entity, etc. These are somewhere or somehow they are already reported elsewhere also in the reports. Then related to environment, we have already discussed. They've made mandatory intensity related disclosures. They've made mandatory purchasing power parity related disclosures. They have made sure that there are separate disclosures related to scope 1 emissions, scope 2 emissions, and scope 3 even for this case also, which is voluntary as of now. Why it is important that you have different sort of disclosures for all these three emission criteria? Because the source, the impact, and the mitigation methodology for all these three type of GHG emissions will be different in all cases. So they have to be, reported. They have to be, the data have to be reported in a manner, and the data has to be collected in a manner that it serves the purpose of the entity in tracking the real-time data, as well as if there are any corrective measures are required to be taken care of, then they are taken care of. Then, in terms of inclusive growth and equitable development, as I told, that job creation in mailer down in small districts, wages paid by the employees, 2% employees to marginalized groups of semi-urban or urban areas. This is also very important. Now, again, a very new concept and a concept which is going to stay. Last year, they said that for the entities, those who are doing BRSR, they are introducing a new leadership indicator, meaning by which they said that the companies are required to disclose data related to the carbon credits, green credits as they call it, and for the value chain partners also, for top 10 value chain partners, they are required to capture the data and they disclose the same in the report, but it is still a leadership indicator. But here lies the challenge, because somebody will come up and say, ki, you are saying, or you are making this statement, but when I talk about the normal ESG related disclosure of value chain, it has been deferred by a year by the regulator itself to 2526, and for carbon or green credits related reporting, it is there. But this is how it is, and it is, if it is there, it is our responsibility to comply with the same. The anomaly is there. Still, we would assess, and we would like to figure out that how the entities, different sectoral entities, have reported this data, if any being reported by the entities in their 2425 BRSR reports, but it was there. So what they say, that it will enhance the transparency, it will align the entities with the government initiatives, because in at global level, carbon credits, trading of carbon credits, or dealing of carbon credit is something which is very, 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 very prominent. And secondly, the market is still under infancy phase in India. The framework or the methodology is still under its infancy phase in India, but globally it is gaining more prominence, more recognition, and it is relatively important for us, for example, to assess and catch the data. See, if I am in entity, if I am an entity which is a service sector entity, for example, take insurance or banking one, it is, the traveling is something which is very important for me, or which is inseparable from my business model. So I can't stop traveling from one city to other city, or one country to another country for the purpose of work. On the same side, I can't stop being vigilant about whatever emissions my entity directly or indirectly is generating. So is there any way? This is one of the most common questions which comes up in front of us whenever we go and meet these type of entities who are in specifically service sector, that is there any way that we can reduce our scope 3 emissions? There are certain direct or indirect methods to a extent. For example, you very, very basic, you do carpooling, you use solar, you use encourage your employees in using the transportation methods or other methods which requires less amount of energy. But it is impossible to separate the same from the business process which is there. So in that case, this carbon offsetting, so this concept also, green credits or carbon credits, as well as the carbon offsetting concept, is in its seeding phase in India. But it will gain prominence. It will help your entity in terms of mitigating the effect of GHG emissions or whatever polluting emittents indirectly which your entity is generating. So you will be able to soon buy carbon credits and offset the same. It is as as similar as that. See, if I'm generating an indirect emission in form of scope 3, I'm planting trees somewhere else. So I'm making sure that the environment gets benefited from the other place where I'm indirectly and inadvertently I'm affecting the environment or other processes through my value creation process. So this is again something which is very important. And in this year itself, we will see that how it is going to shape up. Again, I'm saying that there is an anomaly in last year's reporting standard, that at one point it is being said that the reporting related to value chain partners is deferred to 2526, but on the other side, the green credit related reporting, though it is voluntary, it is not being deferred till date by the regulator. So there is an anomaly in last year's reporting standard, but we'll see that in this year how it shapes up and how the reporting space integrates this new reporting requirement in itself. Any questions, Kinjal?
Yeah. Yes, Kuldeep. So we have certain questions.
Sure.
The first question is, what connection can be identified between SBTI science-based targets and client-related disclosure in BRSR?
So I think I'm not very clear what the question intends to ask, but I think the one who has asked, uh, maybe the intent was that how SBTIs can help you in integrating the same within your BRSR reporting, etc. So, see, when you talk about sustainability reporting or you talk about ESG, it is not all about talking and doing some set of reporting which is being made mandatory by any regulator, or if you're doing it voluntary. It is the actual impact which your entity is going to make, or is going to make, or is making through, or in the process of its value creation, is something which is very important. So, to assess, for example, if I say I am a steel manufacturing entity and I say that I want to be carbon neutral by 2045 or 2040, in line with any other countries or any other parents reporting requirement, because India has taken as a part of the Paris Convention, India has taken a target of being carbon neutral by 2070. That is a far cited approach which somebody has to take, but entities are generally taking middle term targets of 2030, say 5 years, 15 years, or 25 years. So if I say that I want to be carbon neutral, it is not a statement, my friend, which is required to be made. Say if I am the chairman or CEO, I say that let's be carbon neutral by 2040. There is a lot of working which is required to be made. And as a joke, we say sometimes there is no science in science-based technology targets, but it is not the case. So if I say that I want to be carbon neutral, a lot of calculations, methodology is required to be incorporated to reach to a level where I can claim or say that yes, this is something which I will achieve in certain set of years. So that's where I feel that the SPTIs or any tech related tool or any scientific approach towards setting up these goals will help you in eventually the wider course of your business. Any other question?
Yeah, we do
Please.
have questions. Thank you. What categories of scope 3 emission are most material for the service sector? The example mentioned are purchase goods, business travel, commuting, or anything apart from whatever is mentioned.
See, I can tell you my perspective. Whatever service industries we have worked with, I feel that business commute or something, traveling is transportation is something which is the most important and the pain area of these service sector companies, because the purchase of goods is not a substantial part of their whole value creation process. There might be case that I'm buying hardware, like say if I'm in a software industry, for example, a IT giant will buy hardwares, etc., or maybe data centers, or maybe machines, but it will be limited to a certain extent. The major problem lies in the indirect emissions related to travel and commute, and this is something which you can't. I say that you can't separate from your business process. For example, if you are an insurance entity, if you're a banking industry, can you say that I'll make sure that my employees don't travel one place from other place? It is not possible for to generate business. For example, you are a say wealth management company, say for example Motilal Oswal or some other entity also, to make sure that they crack good deals,
Business
they will travel to
to
some other
develop
country, some other
business, of
place.
course.
Yes, yes. So it
That is
is,
a part of the business,
yes, yes,
without which the
and that
business cannot grow or company cannot sustain.
and that is the pain point of these entities, because If somebody from, say you are sitting in the sustainability teams, if you say ki, let's cut down the traveling, then the business development head will say ki, what you are doing. If the business will remain flourishing, then only the sustainability initiatives can remain in place. Otherwise, so if there will not be top line or bottom line, what will you do?
Since we are talking about commute or business development, there are certain clients wherein the personal touch is also needed, or the personal
Correct.
connection is needed. Yeah. Okay.
So I'll
Sorry.
tell you my personal example at our small level. We are a startup only. So even if we are advising on ESG or sustainability, we almost every week one of us travels to a different city, or in a few months we travel to outside India also. For work, it is impossible for you to stop.
Mm, that's correct. That's true.
Preaching is easy, implementing is difficult.
Yes. But you can just definitely incorporate or reduce your travel if it is not necessary, if it is not yeah.
Correct.
Then there is one more question which is talked about, wherein there is a question with respect to finance emission. If we talked about financed emission, how can we set targets for reducing financed emission? I'm not sure about what this question.
Actually, I am also not able to. Maybe it is the one who has asked
If we
is
if we
talking
talk
about.
about finance emission, how can we set targets for reducing finance emission?
Maybe the one. Nini, let me come to this point, because maybe the one who has asked this question is talking in context of the finance sector, that is banking and NBFC industries. So finance emissions, if I am not wrong, the one who has asked this question is talking about that. Say it is not that popular in India, but outside India, you see many of the leading banks and insurers taking this pledge, or setting this process in place, that they will, for example, if I'm an insurance entity, I will not insure any company which is using thermal power for its manufacturing process, or etc. etc. There might be a case that a bank is setting up a system in place that they will not finance or extend their facilities to a industry or sector which is more polluting, say plastic, rubber, etc. So this is part number one of this problem. Part number two is that how do I control finance emissions? So it is slightly difficult for an entity to control the finance emission. The only way direct I would see is that to make sure that you are restricted in a way that you extend your facilities or you extend your services to these sectors. And the probable or maybe slight far-reaching solution is that you do extend your services or facilities to these entities, but you try that those entities also embed various sustainability measures or initiatives your company, or as directed by you in their business process, or the total number of emissions which they generate in terms of usual business process is reduced or is down year on year basis. And that's why sustainable finance is gaining very good attraction across the industry. So if you want to raise sustainable finance, there are 2-3 benefits which are there. One is the rates are slightly cheaper for those who are raising it under the umbrella of sustainable finance. Second is that the access to the capital, or I would say that you attract the investors of conscious capital if you are reporting correctly on these parameters, and if you are practically embedding the same in your reporting, in business process also.
Okay. Thank you. Now, one more question we have with respect to scope 3 emission is, what is there any way of reducing scope 3 emission, and what technologies the organization are generally using to reduce the impact of scope 3 emission?
See, as of now, we have not found any direct way to reduce scope 3 emissions. I would say that if you count scope 3 emissions, as somebody has said earlier, that purchase of goods, or maybe even if taking XYZ services from somewhere outside is also part of scope 3 emissions. So these are very small initiatives which you can do. For example, carpooling, for example, promotion of uses of, say, solar related traveling methods or etc. But the main, I think, for service industry, the problem lies within the traveling and transportation related issue, as well as some other indirect emissions. So as of now, sorry to say, but there is no direct way out which an entity can apply. And again, if I answer anything based on my experience, it will be vague because again, it will differ and it will be customized or it will be specific to company by company because every company has a different business model and these initiatives are required to be taken care of based on their business model. One such example can be that earlier in case of BFSI sector, the issues of policy or maybe the client dealing or client solicitation was more on physical side that people go travel etc. But post implementation of these digital initiative, say digital insurance or digital banking, it has gone down to a drastic level. But again, having said this, for one part of one set of customers, it can be done. But for larger customers or for corporate group customers, there might be a case that you are required to travel in person.
Okay. Thank you.
So we can move ahead.
Yeah. Can we just take the last question?
Yes, please.
So can BRSR 2.0 be positioned as a competitive differentiator in the global market?
Yes, certainly. And when we said that BRSR 2.0, uh, we we see it as an integrated reporting framework, not integrated reporting framework. And why I say this because India is one of the first countries which has implemented and introduced BRSR as a formalized standard for sustainability reporting. So when you go global, the main problem is there between the comparison of the data, the quality of the data which is being reported, and I think the systems and processes which our regulator is putting in place is going to help the cause and is going to certainly still we have to travel a long way to reach to a level where we say that if somebody is looking at a BRSI report of an Indian listed entity, it will be seen as an sure sort indicator or it is as an differentiator factor in terms of other sustainability disclosures at global level. But still we have to travel a long way, but still we are on the right track, I would say. And if we keep and the answer to this particular question lies with us also as companies, as report preparers and assurers, that we have to start doing it in the true spirit from our side also. Otherwise, we'll not be able to reach to the end of the ladder at any time soon.
Okay, Kuldeep, you can now go ahead.
So quickly, I'll wrap the BRSR part up. So ISF on BRSR core was issued in December 2024. So primarily, the problem which was there in front of the entities who were preparing BRSR reports was that there was no clear requirement, clear guidance which was there. In 2021, SEBI issued a guidance note, but in 2023, when BRSR 2.0 was introduced or BRSR was revamped to BRSR core and different set of disclosure related requirements were added, the guidance was not there. And when we talk about symmetry and when we talk about comparability, different things were falling apart and different companies were going in different directions. For example, I told in beginning also, you take about, give me a second. I'm I'm really sorry. There was an important call which I had to take.
No
So,
problem.
so when we talk about ISF, tried to answer many unanswered questions, but as I said in the beginning, it has given rise to many questions also. Few of the questions which is it has answered was pertaining to say purchasing power parity. There was no clarity as to what is to be taken as a base for calculating the adjusted revenue, and sadly, it was the state of you know reports which we have seen in 2023-24 that X was taking different basis, Y was taking different basis, Z was taking different basis. So different companies were adopting different basis. The correct basis for calculating the adjusted revenue is taking the conversion rate which is being prescribed by IMF, that is 22.4, and for 2324 2325 2425 SEBI said that while issuing this ISF note that there has to be comparability between both years. So, for example, inadvertently also, if I used anything which is not correct in 2324, I have to reset it to the correct adjusting factor, which is 22.4. And as of now, it is 22.4. It might change based on the issuance of certain factor by IMF. So the other question, which was lying in front of the report preparers and assurers also, was pertaining to say what spend has been done on well-being measures of employee. What is to be included? See, if I do uh, for the purpose of say not greenwashing purpose for the purpose of polishing my report, what I would do that I would try to figure out different expense heads and try to add it up to say that it is part of my well-being measures on employee. So now they specified in the ISF note that what can be included in well-being measures incurred for employees. The other question was related to it was very petty, but I don't understand why companies have done it in the wrong way. There was a leadership indicator which is required by companies to be answered pertaining to purchases or trading with purchasing and trading with trading houses. So they were not clear what is uh, the reporting framework meant by trading house. What is a trading house? Somebody said that it is an export house. Somebody said that it is an company, firm, whatever it is, which deals with trading of goods only or general merchant trade, etc. The same has also been clarified by the regulator in the ISF. So many more questions. For example, uh, Kinjal, it was a very different set of problem which was there and which is still there is authenticity of the data of principle 6 that is related to waste water and energy, which almost all technical questions you will see wherever you take or you attend these sessions will pertain to these calculations only. So what is how an entity should calculate? So there might be a case that I am first time adopter of BRSR. Or for me, since I don't have systems in place, so I'm unable to figure out, or I don't have, for example, SOx or NOx meter, I don't have any method to figure out what emissions have been generated. Or even in case, say, I'm using the shared premises, I don't know water meters are not installed, how much water is being consumed by my employees. So they said that you can use extrapolation of data, but again it has to be scientific one, and second is that spend based disclosures can be done. So based on your spending you can do the back working, and you can figure out approximately how many number of units you have consumed, how many number of units of electricity you have consumed, what amount of emissions you have generated. So this is called back working of data spend based measurements, etc. But with a caveat that it is not that if somebody starts adopting or adopts any spend based measurement or any extrapolation of data, that entity is allowed to follow the same for perpetuity. It is written that you should see as soon as possible, you should try to put systems in place where you can fetch, collect, and report the actual data. So, this is also a very welcome change because what we have seen is in manufacturing as well as service industries, both cases, data collection was and is a big challenge. And even if you collect data, the data is not correct as to uh, as to 100%, as well as nobody can claim that it is correct or incorrect. So these small steps for ease of doing business, or whatever has been prescribed in the ISF, helped a lot to do these entities in, making sure that the disclosures and the requirements are being fulfilled properly. But on the other hand, say, as I said, that when it tried to answer some questions, it has given rise to some questions also. One such small question, as we all are chartered accountants, I believe that is related to assurance part. So earlier it was reasonable assurance. There was no specific format which was being prescribed, and that was the, I think, only reason that you will see 100 type of different assurance reports by different preparers. Everybody is writing in their own way and claiming that it is correct, most accurate, etc., whatever it is. Now they said that for ease of doing business, let's keep it as limited assessment oblique reasonable assurance, and the standards of which will be formulated by ISF. So ये तो still till date there is no specific standard which has been formulated. No clarity as to it will be a limited assessment oblique reasonable assurance. What it will be, or it will be both. There will be option which will be given to the entity. And third, that what degree of assessment, what degree of evaluation will be carried out, whether the assessment or limited assessment, as they call it, will be stricter or a grade higher than the reasonable assurance. So these are very important questions. And even if till date, I think almost all entities, top entities, and all entities have published their annual reports, the question is still unanswered. So there are small questions which are there. For example, uh, reporting of data on standalone and consolidated basis. For example, comparability of the data. So it is very easy to say that you have to do it in a way that consolidated one year, then consolidated other year. If you do it differently, then you have to restate your figures which you have given in the previous year. But it is very difficult in practical senses. So I think there should be a sectoral guidance which is required instead of a plain vanilla ISF note which is there. So sectoral guidance should address sector specific problems. Like somebody asks about inconsistency between the benchmarks because somebody is reporting 3%, somebody is reporting 30%. And as soon as a layman, you will see 30 and 3, you will see yeah, this company is doing very bad and this is doing very good. Where the case may be that the calculation in itself may be wrong. I'm not saying it is wrong, but it may be wrong. So sectoral guidance is required. So these reporting boundaries, I think a little slight more deliberation is required in terms of what reporting boundary should be, even if somebody wants to do it in consolidated basis, because it is very difficult to club each and everything at one place. For example, if an entity is having 20, 30, 40 subsidiaries or associates, or 50, 100, even more than 100, then it will be difficult for them to collect and collect the data at one go. So there should be some, stepwise or other requirements which should be given. One question which is still unanswered, and I think which should be answered ASAP, that is related to the disclosure of value chain partner. See, again, Kinjal, we will fall and we will see that we will find ourselves as a listed entity in the same situation as we were in 2425, because we are sitting on 18th of November. Still, there is no clarity as to what is to be disclosed. Even some people are saying or understanding that the disclosure related requirement to value chain partners has been dispensed with. Matlab, it is over for all, it is not required to be disclosed. Then still it is not clear. Second is that green credit related reporting, because we have to understand that first let's put the systems in place for the entity itself and then move or extend it to the value chain partners. So half year has already passed by. If tomorrow anybody comes with a standard, be it ISF is part of, or ISF is is has arisen out of the industry bodies only. So they should understand that if somebody comes up with any sort of note or regulation, say on 30th September, will it be possible for entity like Reliance, HUL, Mahindra, Maruti, or any other top entity, bank, etc., to integrate and incorporate it in the rightest manner in the system? In my opinion, the answer is no. So these are various questions which are still unanswered. Having said this, everybody who is working in and around BRSR, be it for assurance, be it for reporting, should once go in detail through this BRSR ISF note, because it is very helpful. It will answer a lot of questions and will make sure that your entity's reporting is at par with the other entities. So I think we have discussed these intensity based calculation. Let me cover small part of integrated report. So when you talk about narrative to number, see, BRSR is more about filling up the form, filling up, setting, disclosing the numbers, be it in quantitative manner or be it in qualitative manner. But integrated reporting is something which requires a compelling story to be communicated, drafted, and to be shared with the customers, because it is a mirror which is reflection of your company's value creation process, as well as the whole journey which your company has traveled and is traveling en route towards long-term sustainable growth. So there is difference between the intention of uh, literal intention of BRSR as well as integrated reporting. But when you see the actual intent between behind these two reporting frameworks, the intent is same. BRSR, as I said, it extends beyond your ESG parameter, environmental, social, and governance parameters. It is something which I think a first step to by an Indian regulator towards achieving double materiality in every context of reporting, be it financial, be it non-financial. Then you come to IR, that is integrated reporting. Integrated reporting is complete reflection or a true reflection of company's value creation process. So there are many overlapping data points. For example, CSR, you report numbers in financial statement, you report lives impacted in BRSR, and you report this particular combined data in social relationship capital also. For example, R&D expenditure. So you report R&D expenditure in your BRSR, you report R&D expenditure in your financial statement, you report R&D expenditure maybe or may not be as a part of your intellectual capital of integrated report. So financial figures are reported in financial capital, BRSR, as well as the financial statement. So there are many overlapping data points, but some distinct ones also. So what is more important is that when you prepare these reports, as I said in the beginning, it cannot be a jigsaw puzzle which is going in different direction. It has to be placed in a way that one portion of your report is interconnected to the other portion. And if somebody, even if a layman sees it from the beginning to end, then it looks like a flawless story. It doesn't look like that somebody has forcefully, combined various different pieces and put it into a piece of paper or in a shape of report. Then some common challenges which we have seen that we have faced while working in and around these reports with top listed entities is pertaining to, say, material issues is something which is very common, and I would say it is something which is very important. So you see in integrated report different material issues, you see in BRSR different material issues. Even the description of the same issue is different in integrated report and different in BRSR, which is not acceptable in any case. Ideally, the material issues can be different. I am again saying statutorily it is not required that it should be same. But if you want to make sure that your report is truly integrated in every manner, then you should try to make sure that the material issues which you report in BRSR, which you report elsewhere in your annual report, and which you report in your integrated report be aligned in all senses. So the second challenge lies between various quantitative data points. We already discussed that there are two, three things which one should adopt to make sure that the numbers become narrative and it truly reflects your company's journey. It becomes an enticing factor or the edge for your company, so that any stakeholder, any investor who looks up to your entity will look up to your BRSR, IR, valuation model, MDN, and in the instant decision will be that yes, this is the entity in which we should report in, because first the numbers are correct, or if it is not in the good shape, that at least they are trying to be transparent and they are on the right path. So when you prepare an integrated report quickly, in next 2 minutes, I'll wrap it up. Integrated report is, as I told in the beginning, is governed by IIRC, that is Integrated International Reporting Council, which has now merged with IFRS Foundation. So the primary governing body is IFRS Foundation, the same regulator which has issued IFRS S1 and S2. And because the financial as well as non-financial standards are calling for a larger symmetrical convergence between both of them, I would say when Index was introduced or when IFRS was introduced, so the you know we used to say that the business should drive the accounting, not accounting should drive the business. Substance over form. The same is the case with, I think, non-financial reporting also. Sooner the time is going to come when non-financial reporting parameters or framework standards will shape the way how your financial reporting is being done. Coming back to integrated reporting, if you want to prepare a truly integrated report, keep in mind three, four things. One, that you should benchmark only IIRC's framework. There is no other framework which prescribes preparation of an integrated report. Be sure that you are making correct statement, no vague statement. For example, you see many of the reporting boundaries or about the report sections of top listed entities, wherein you will see that it has been written that companies adopted GRI, TCFD, CSRD, ESRS, integrated reporting, XYZ, everything. So all standards cannot apply to one set of reports. Third is that the framework of IIRC for IFRS Foundation prescribes that there are six capitals which are mandatorily required to be reported. Yes, if there is a case that your entity is not having one capital, for example, for a service sector, manufactured capital is not relevant. So they can skip or they can change the name of capital also, but there is only one approach for preparing integrated report, that is six capital approach. There are eight core elements of an integrated report. Uh, Comparability as well as sanctity of the data is one of them, which are required to be adhered to. And fourth is, what do I do with interoperability of the reporting frameworks? Because somebody who has attended this session will say कि ये तो समझ आ गया कि numbers to narrative है, that you have to put right numbers at place in BRSR as well as the connected story in other sections of your annual report has to follow the same, and it should be you should do all the backworking also to arrive at a data number. But on the other hand, how do I make sure that I don't fall apart while putting all these puzzle pieces in one place? The best way is that while you do these reportings, make sure that everything is going hand in hand and cross checking between various sections are there. Third is that don't do anything for the sake of reporting. If it is not there in entity, it is very, I would say, very acceptable to say it is not uh, available or give some proper reason, but don't put any vague number in place. Fourth is when you when you identify KPIs, this is most important other than procedural issues, because uh, I feel that none of you have come here in large numbers to see that what is written in the BRSR framework. It is there on web, you can download and read. What practical challenges which you will face is that correct identification of KPI. So KPI, that is key performance indicator, to convert it into KPIs, that is key performance narratives, is the new gold standard of uh, integrated reporting or gold standard of correct reporting. Correct identification of KPIs, consistent identification and tracking of KPIs, and then correct disclosure is something which is very important, because in 2425, I found that there are five data points which are favorable to my entity. I took those data points, I disclosed those data points in BRSR, IR, value creation model. In 2526, I found that no, these data points are no longer favorable to my entity. So what do I do? If I don't disclose the same in the next year, then I'm losing out in comparability and I'm losing out the true meaning of what an integrated reporting or a sustainability report should be. But if I report, then it is going to look bad. So before you identify uh, these KPIs for disclosure purpose, do a proper exercise. And again, as we said, that all these things are sector specific. For different sectors, there will be different set of data points which will be important, which will be relevant. So once you take any data point, at least 3 to 5 years time span, you should disclose that data point in your report. Otherwise, it is you are going to lose out on comparability part. And the same applies to assurance section of these non-financial data also. So SEBI says in its 2025-28 March circular that it is responsibility of the board to ensure that the that a person or agency with proper experience or expertise is being appointed, and it is independent from whatever other functions it is doing, or it should not be connected with the entity. So, having an independent review and actual review is something which is important and which is going to help you set your narrative, which will flow from your numbers, starting from financial to non-financial, then to integrated reporting. And sooner, if we keep doing, see, we don't realize, but if you better yourself by 1% every year, everybody of us will be a billionaire in next 15 to 20 years. So it is not the case that you are going to sort it out in a year. But if you want to transform your KPIs into KPIs, that is key performance narratives, it is going to take a little hard work, I would say, and consistency in terms of collection and reporting of data. So, with these words, I would like to rest my voice for today's session. If there are any other question, I am happy to answer those questions. Even if you feel that you have some specific question, you can reach out to the committee over email or me on LinkedIn, etc. I will try to answer whenever I get time.
Mm. Kuldeep, we have one question.
Sure.
You have mentioned few minutes back that about the value chain partners. So there is a question on that aspect. How does the company ensure data quality and avoid double counting across the value chain?
See, I don't understand what double counting means for data quality. I already said that if you want to say that I am on a push mode, that is you push any information or any data point or any questionnaire to your value chain partners and the information is going to flow in. The answer is no. If you say that it is you are going to work on the pull method, that is you will say that give me these data points. It is not going to work. So the best way is to educate them that it is not for our reporting journey. If you are tracking these data points or if you report these data points, even if for yourself, for example, just if you are aware that many of the export houses, India is a from some parts of our country is export oriented also. Many export houses have already starting, though they are private limited entities, simulating this BRSR. Why so? Because their buyers who are sitting in Europe or West countries or America, etc., they have said that until unless you comply with a certain level of sustainability measures or ESG measures, we are not going to buy goods from you. So we have to tell and educate our value chain partners to make sure that this is not a additional exercise; it is a value adding exercise which is going to take place. Second is double counting. I think if you can specify what double counting you are referring to, then I will be able to answer in detail. But else, use of tech and specific embedded software is something which I think going to help you in eradicating these calculation errors.
Oh, okay. So for double counting, I think so. Hmm, Can we? Can you, Damini? Can we elaborate on this question? Or okay. So
Not an
uh,
issue if somebody is not
anybody?
there who
Yeah,
has, they can raise their
they
questions
can
later on
reach
also
out. Yeah, they can reach out on to the mm, to the
to the
panel
committee as
and
well as yes,
yeah,
yes,
correct.
to me on Sol LinkedIn, not an issue.
All okay. So I'd like to end our session with word of thanks. So good evening, everybody. After the IT return filing session,
Yes.
and amidst audit session, I would say thank you on behalf of Sustainability Reporting Standard Boards of ICAI. I extend my sincere gratitude to each one of you joining us today for enlightening webinar from numbers to narratives, navigating BRSR 2.0 and IR for sustainable growth. Your participation has been instrumental in making today's session a success. A heartfelt thanks to our esteemed speaker, CA Kuldeep Kothari, for
Thank you.
sharing his deep expertise and practical perspectives on navigating BRSR 2.0 and IR for sustainable growth. Your presentations on the topic has thus makes a shift from static metrics to actionable sustainability perspective, which enables companies to demonstrate real progress and leadership in journey of India's green growth. The discussion this afternoon suggested insightful perspectives on the evolving landscape of sustainability disclosures, the integration of ESG metrics with business strategy, and how BRSR 2.0 integrating reporting are shaping a transparent, responsible social corporate culture. Special thanks to our participant whose engagement, thoughtful question enriched today's session, truly turning this into a collaborative learning experience. We invite all the participants to join us for our upcoming webinar scheduled from next week Thursday. The timings are a bit changed. Earlier it was 3 to 5. Now it will be 4.4 p.m. to 6 p.m. where we will continue exploring critical topics in sustainability reporting and best practices. Thank you all.
Thank you.
Thank you.
So I think we can sign off now.
Yeah.
Tech
Thank you all.
support, go offline.
Thank you, everyone.
Thank you.
Thank you.